Nice music. Hello and welcome everyone to this event, Fintech South. We are at the Word stage, the APAC section, and today we are going to talk about India Fintech. I am really, very happy to host Amrish Rao. So welcome Amrish to the show.
Thanks, Amit. Really happy to do this.
Right. So last time we actually did a fireside chat. It was Money 2020 in Vegas, and I mean, obviously, I can't bring Vegas here, but certainly we can, bring a lot of sort of insights into the discussion and make it worthwhile and compensate for it.
Sure.
Let me just give a quick background to the audience. Amrish Rao was the CEO of First Data Merchant Solutions in India in those days around 2012-13 when we started MEDICI. And I think we didn't know each other back then, but subsequently he founded Citrus Pay, which he sold to PayU, and he was the CEO of PayU in India. Very, very successful company in the payment space. And then he went on to also do fintech investments and partnerships for Naspers. And then now he's the CEO of Pine Labs, which is a modern merchant platform. And they have a variety of POS solutions. And they just launched an app store which can allow third-party app developers and companies to play on the POS platform that Pine Labs has. So Amrish, this illustrious career, I also know that you're also known as the super angel in the fintech space. You have actually invested in a lot of companies. You're backing a lot of fintech founders. And for the guys who don't know, we actually run a very interesting group in India. And Amrish, like we all respect him so much for everything he has done for India fintech. So I could not find anybody better than Amrish for this discussion. Welcome, Amrish, again.
Thank you, Amit. Thanks for all the nice words. Happy to contribute and share some of my experiences both in India and in Southeast Asia.
Right. Now you had a very sort of fun discussion with Kunal. I can't match you guys, but let me try to start with I know one of your favorite topics, which is this whole public-private partnership in India, right? So. Especially for the global audience that we have today here, and especially for people from the US who have always seen proprietary platforms like Visa and Mastercard and companies developing both the infrastructure layer as well as the application layer. I think India is very different here, starting with biometrics-led digital ID, Aadhaar, or interoperable payment system like UPI. And a lot of new things which are sort of coming up now, like account aggregator for data sharing, as well as the OCIN framework for lending. There's a lot of infrastructure which is created by government or agencies which are more central in nature. And most of the startups and fintech companies are actually playing on the application side. Now, obviously, there is a fair bit of private infrastructure as well, which have been built. For example, companies like Pine Labs or like third-party private financial infrastructure like say M2P app, for credit card issuing, let's say. But it's very different, right? Like there's no vertically integrated companies in India, right? You're still riding, a lot of fintech in India is actually riding on the public infrastructure and this what they call as public goods. So how do you see this space and where do we go from here?
Yeah. See, I think, and you're right, and let me just sort of go a little bit deeper into the way Indian fintech is evolving, right? So around the world, what you have is, and let me take a great example of Square Cash. And when you look at Square Cash and Venmo, while Square Cash and Venmo have done a tremendous job when it comes to consumer, understanding the consumer behavior and understanding consumer use cases, they also have to do a lot of hard work in building out the backend pipes by which money can move into the network and money has to move out of the network. And for that, they might have to go to banks, financial institutions, and create integrations and pipes into those institutions. In the case of India, what has happened is there's a public infrastructure which has come along, wherein integrations into banks and financial institutions have already been created and they have been delivered to all the fintechs for them to use. So when you look at a fintech in India, the fintech has to then focus on purely the use case or the application that you've created on top of that. Now, that is a great situation to be in, because when you look at fintech, what you really want to do is you want to take consumer behavior, you want to change, you want to take the changing landscape of banking and financial services and build layers and build APIs and build applications on top of that, which deliver value to, let's say, a merchant or to a business community or to that consumer. And I think that advantage has been taken very well. I do see that continuing over a period of time. So when you look at Google and how Google has gone ahead and completely captured the payments, consumer payments market in India, I think it's a very healthy sign, because you want to bring in great technologies, allow money to move as fast as messages. And if that happens, it has a direct impact on businesses, it has a direct impact on the economy. So I think that's a very, very powerful thing to happen. That's point number one. Point number two is, for any economy to grow, it's just not payments which needs to grow, but even the flow of credit needs to move. And just in recent times, we're getting to see a very similar play wherein data will get shared across businesses. Of course, this is not personal specific data, but data will be shared across businesses. What that is going to allow is, it's going to allow fintechs to make a better decision to deliver credit. In markets like India, in countries like India, credit is extremely important to drive growth and try to drive economic growth. And I think payments and credit, with support of innovative fintech products, will help the Indian economy a lot.
Right. So, what does it mean for the fintech startups, Amrish? Like, if a whole lot of infrastructure is being developed by public, in the form of public goods and is made available by the government, does it affect the valuations and long-term prospects of the fintech companies in India?
So yes and no. So let me start with the no, right? So if you look at most of the fintechs, they wanted to play very, very close to where the transaction is happening. So, for example, in our case, if it's an online or offline transactions, at the point of transactions, we want to be, that is, Pine Lab wants to be at the point of transaction. But then there is a point of transaction where, I could be lying around in my sofa and I remember that I got to pay someone for the beers from last evening, and I still want to send money to that individual. And most of the fintechs are solving for close to transaction problems. And hence, if we are given a public infrastructure to ride on, and Visa has done it for many, many years, Master has done it for many years. Now we have faster payment infrastructure which is coming. Look, we like it, and I don't think so that's going to impact us. However, the moat for a fintech starts to get reduced. So the moat for fintech, as you know, could be on processes, could be on the pipes that they have built, or the moat could be around the consumer. Here in this case, the pipes are no more a moat. Processes can still be a moat. Let me give you an example. As an angel, I've invested into one company called Anyfin in Sweden. And what Anyfin does is, it does a very simple job of converting outstanding balances of your credit card into a low-cost loan. Now, that is something which banks and financial institutions have been doing for the last 15 to 20 years. All that this startup has done is, it has made it so smooth for the consumer, where the consumer doesn't have to call the bank, doesn't have to call the credit companies, credit is just delivered. Now, I think moats can still be built on processes and really rewiring the operations of financial institutions or a fintech. So I think the problem really comes up is, if you want to build a moat around the pipes into banks and financial institutions, that moat goes away.
Right. And as fintech is a very, very broad space, and you have actually helped founders, invested in companies across the board. Where do you see specific opportunities in the Indian market now?
So, globally, opportunities are on many, many different layers. But if you actually look at what is fintech in a broader sense, and I'm still talking fintech very close to banks and financial institutions, fintech basically covers for a deposit account, abilities to get a loan, abilities to move money faster, get some of the protections, which could be an insurance or some other protections which are very relevant to a consumer or to a business, and finally helping in growing money. If these are the five basic points on which fintech is being developed, around the world, it's been proved that moving money faster is the easiest way to get into a market. And I think that's an area which most Indian fintechs have done a lot of work in. So moving money and moving money faster, easier is the first stop for fintech in India. The second stop for fintech in India is around credit. Unlike other markets where the laws are very strong and the regulation is very strong, I think the laws and regulations in India have yet to grow. But credit in India is going to be a very big opportunity because credit right now is just broken how it's delivered. But quite a few fintechs are trying to solve for that. So that's the second area to solve for. In my head, the third simpler area is around protection, and that could be insurance and bank assurance, which is out there. And we are getting to see innovative businesses coming up and delivering those. When you look at the fintech area, so there is Policy Bazaar, there is Discovery, there is other players who are going into that area. So that's the third area. Fourth area is deposit taking. I think deposit taking is extremely tough because that is related to trust, and fintechs are going to take time to deliver trust. But in my head, fourth area will be around deposits. And I think the toughest space is around growing money and growing your wealth. I've generally been in the camp which believes that growing wealth, first of all, is not easy. And then second is developing trust and then growing the wealth makes it even more difficult. So that's the way I see the pecking order. Now, I'm not even going into technology and infrastructure players. So the market alike. So every market has a market alike. So for example, India and Southeast Asia, M2P or YAP Technologies is developing a market alike. And when it comes to Pine Labs, we are developing the biggest infrastructure for merchant network. So there are businesses there. But when you talk about applications and businesses, it's those five areas that I talked of.
Right. Now, on the wealth point, somebody who's building a company in this area recently told me that Indians are very good at saving, but not how to grow your wealth, which is, if you're getting a salary, you're saving, but how do you grow that wealth is something that we still have to learn. And also, it's also evident that we do not have that many choices and options today. For example, in the US, the number of ETFs just crossed the number of stocks in the market. And while in India, we have 60 or 70 ETFs as of today. So there is a lot of work to be done. But essentially what you're saying is that in consumer payments, we have arrived. I mean, the UPI is kind of a classic example of a very modern, probably one of the best payment systems out there. But there are other areas in which developments are happening and companies are getting built. Just wanted to double click a little bit on the merchant side, right? The acceptance side. We have seen in the US that Square is building a both-sided, right? Their Cash App is actually growing very well. In the last quarter, they made more money from the consumer side than the merchant side. So on the merchant acceptance side, what do you think is happening in India right now, and what is the opportunity?
So let me give you some very recent information, Amit. So as you know, India is still struggling through the COVID pandemic, right? And in the last 6 months, we've been pretty much in lockdowns. Now, those lockdowns have varied. So month of April was almost 100% lockdown. Month of May was 100% lockdown. And August and September, I would say about 15 to 20% of the country has still been under lockdown. And in that lockdown, we as Pine Labs have terminalized close to 15,000 merchant outlets across India. And these are ones which have devices. So these are not soft POSs, or these are not applications, or these are not downloadable. These are devices which are being deployed. So what's happening is the small merchant is very clearly recognizing that they need to go digitized. And for digitization, the first thing that they need to do is digitize retail payments. So I think retail payments and growth in retail payments is still very, very healthy, and that will continue to grow. So that's one part. But the second part is, the story is not ending at retail payments. The story is about digitization of the entire merchant. So the merchant is digitizing his storefront, is digitizing his business operations, is digitizing HR and accounting and all of these things. And that's a big opportunity which is coming along. So lots of fintechs are creating point solutions to address, let's say, just HR activities for a small business at a merchant location, or just managing their accountings or soft accounting. And those businesses turning out to be very successful. So on the merchant side, I think the bigger story is on digitization of the merchant. The last piece is, as merchant gets digitized, the merchant is going to need different ways to communicate with its consumer. So the entire B2B2C model is also going to accelerate when it comes to merchant business in India. So, there's a company called Podium in the US, and what Podium does can very well get applied to the Indian market. Of course, what Square is doing on the merchant side is already something which is being applied in the Indian market. So lots of similarities, just that you need to find the right way to get into the Indian market.
Right, right. And Kirana Tech is also one of the things which is quite popular in the segment right now. But let's move on to another topic which is very popular on Twitter. I think there's a whole lot of tech Twitter noise on neobanks, and basically it's quite negative. Like people say, why do we need so many neobanks? Although people have never asked that why did we need so many banks, right? Which is in dozens and dozens of banks out there. But the question is really that maybe sometimes people over expect things in the short term, as they say, right, and don't see things in the longer term. My belief is that in 5 years, I may not be using my HDFC Bank or my Kotak Bank account. So I wanted to ask you, like, what is your view on neobanks? Do people get it or they don't get it? What's your view on where the neobanks will go in India?
So I think the neobanking opportunity is right. So if you would have asked me 9 months back that our kids going to, going into grade 5 are going to spend time in front of a computer and do online courses, I'm saying, are you kidding me? That's never going to happen. Not going to happen for the next 5 to 7 years. Similarly, through this pandemic, if you're going to tell me somebody is going to go into a bank, fill up a form, actually be happy in carrying cash in their pocket, I really, really doubt it. At the same time, banks have been created in a way where banks have the legacy, and the banks have large front offices and large back offices. A neobank which comes along, which completely optimizes on the front end and on the back end, is going to win. I think what a neobank is not going to win is, let's say, saying, I've got a great metal card to give to my debit customers or a credit customer. Now that's not innovation, right? But if you're going to come in with a neobank which is extremely light on the back end and extremely light on the front end, I think it can very well change the face of banking. I'll talk about 2 examples of companies which I've invested into. I've invested into a company called Jupiter, and Jupiter is now 9 months in the making before the product gets released. And the only reason it is 9 months in the making is they are not so much worried about what's the front end digitization they are delivering. It's the back end that they are trying to solve for. And what that does is, when this product comes out in the market, their cost of transactions are going to be very low. The front end is going to be innovative, and they are really going to give a run for the money for the existing banking business. That's one. Second is, there's a company called On Juno, which just launched in the US, completely developed out of Bangalore, and is going to deliver a product in the US. So another thing which is going to happen is, there's going to be somebody sitting in the Nordics who's going to develop a neobank for the Indian market. And we need to be ready for that. Right. So neobanking from anywhere in the world is going to get developed for a completely different part of the world. TransferWise has done it for remittances. Revolut was trying to do that in the global markets, but I think that time has truly arrived. It will be a mistake if we don't take this seriously. I think this is going to be a very big opportunity.
Right. Let me ask you a slightly sensitive question. It might be a little bit tricky, but very very pertinent, right? So you basically grew first data business in India, really really well. And we had done an analysis about 5 years back or 6 years back in the fintech space that even though globalization is such a big thing, but in fintech, you really see fintech companies going from one country to the other and expanding rapidly, right? So, for example, in India, if you look at even the larger ones like PayPal and Stripe and all that, they have, I would say, relatively struggled or not grown as much. But you were quite successful when you were building first data. So, what's the key to the success there?
I'm going to tell you a funny story. So, First Data and now Pfizer actually used to be based out of Atlanta, and I'm going to tell you a very funny story. So, in First Data, my breakthrough moment was I acquired one of India's largest banks payments platform. So, ICICI Bank's entire payments platform, I bought it, and about 9 months before I bought it, First Data got acquired by KKR, and
Okay.
and First Data used to spit out $2.5 billion of free cash. KKR bought it out. KKR wanted to get a better EBITDA position. So suddenly, from an acquisition company, First Data became a growth company. I managed to pull off this acquisition. I paid about 65 million for that acquisition in 2009. But the beautiful thing which happened for me, or the lucky thing which happened for me, was in this entire KKR journey, they started to change the leadership of First Data. And literally over a 3-year period, we had everybody change from the Asia Pacific head to the global head to even the CEO got changed. For next 2.5 years, nobody knew what I was doing in India. And they allowed me to do what I wanted to do in the Indian market. So
Yeah.
here I was like an entrepreneur who had a big business available to me. I had nobody to answer to. I was just building for India under the First Data brand. And that allowed me to create an organization which was ready for the Indian regulation, Indian processes, Indian governance mechanism, and for the Indian people. And that worked very well. I think that's the big lesson for some of these global fintechs when they are coming into India, is that fintech is not very easily transportable. Few companies have done it in easier parts of the business, but in general, fintech is not very transportable. And when you want to make it transportable, you've got to really commit to the local markets and the local market practices. Only then you're going to win in that market. If you think what works good for European markets will work good for the Indian market, obviously that's not going to happen.
Right. So strong leadership, and I'm sure pricing played a very important role because it's very tricky for international guys to get India pricing. But that's very very valid input. Let me also ask another slightly sensitive area. Chinese investments and global investments into Indian companies, and there is a lot of hue and cry. People have written all sorts of blogs on this, that why we should not take money from outside. And then there's Reliance raising billions and billions of dollars from pretty much everybody outside India, right? Nobody questions that. People feel very good about it. So my question to you is that as far as fintech is concerned, is there a problem if we are able to make our products and ecosystem stronger by taking money from outside?
So look, I have a slightly different opinion than the general public in India, and my opinion on that one is, let's separate out nationalism, politics from business. Sure, I think we all can be very, very nationalistic and say that, look, if there is tension between two countries, the government has to take steps to protect India's interest. I fully get it. But I don't think so. Money has any color. And if you see some of the global businesses, they've actually grown on the backs of money which is coming from different parts of the world. So I see that the way that you can solve for some of these issues is not by stopping investments coming into India, but rather building in strong local practices and governance by which Indian businesses are protected or Indian resident organizations get a certain amount of benefit. Remember, I'm also a product of the capitalistic world. I spent 15, 17 years with NCR and with First Data. So I'm the last guy who's going to turn around and say, hey, look, India needs to be a protected market. I'm just going to be the last guy to do it. All which I'm trying to say is I understand the nationalistic feeling and I understand the need for protection. But what I don't understand is when the two come together. And I would love to segregate those two parts. Me loving my country has nothing to do with me wanting to make my country and my business grow from an economic standpoint.
Right. Oh, love it. And very, very interesting. I'm just sort of bringing questions from different angles. It's all a potpourri. There's no particular trend. And, Amrish is one of the guys whom I can ask any question, and he'll probably have a good answer to it or a good view of it. It might be different from many people in the market, but it's really, really interesting. So let me ask you that there is a question that nobody asks in India in fintech usually, that we have a sort of a double whammy, right? So on one end, everybody knows this, but does not talk about it, is that monetization in India is very hard, because customers just don't want to pay. Also, they have been spoiled by offering all these free discounts and coupons and offers. But in general, I think it's very hard to kind of monetize. And on the other hand, we have also seen, so MEDICI did a study recently and we looked at all the sort of exits either through M&A or IPOs, and we saw that there is like no IPOs in the last 2 years from fintech companies. And then also there is very, very few sort of M&A deals which happen. And when we look at countries like US, right, and a lot of our audience is from there, they probably need to understand this, that, for example, in Money 2020, I think the conference got sold for $100 million. There's a podcast by Joe Rogan which got sold for $100 million. So there's a lot of exits which happen. You have seen all the M&A which happened in the payment space. You have seen the number of IPOs that are happening. Now there is SPAC. So what do you think will, where does this go? What is the end game really?
You say that I like to give different answers. So sorry, I'm going to give you a completely different starting point.
Okay.
I just read today that US is going to require $1 trillion to support the economy for every 45 days. $1 trillion. Wow. Now, can you imagine the liquidity which is flowing into the US markets? What are we comparing India with the US? You just can't compare India with the US. $1 trillion liquidity going into the markets and being absorbed is a completely another level. I think the mistake that we do is look at India and then look at the US. I think the way to look at it is India is today about 15 years behind the US in terms of the whole funding and investment cycle. It might be about 7-8 years behind China in that entire cycle. And I'll tell you what, as an entrepreneur, I love it. What I would hate to do is sit in a market like the US where everything is priced to perfection. I would love to buy the Peloton stock. I looked up what Peloton is valued at. It's valued at 35 billion. How am I going to make money on Peloton stock if I'm going to buy it at 35 billion and then, the statement is going to age poorly? I can see Peloton going to 350 billion. But all which I'm trying to say is that, it's just a massive market. I think we should feel happy that we are getting to build it very early. We are getting a chance to go into it very early. And if we build a successful business, we'll have some great outcome on this.
Right. And I have got a notice that we are sort of running out of time. So just one last question. This has been a super interesting discussion as always. That what do you think about the segments which have been relatively neglected by banks? For example, the millennial segment, Gen Z, bottom of the pyramid guys. What's going to happen there in India?
Look, and again, I'm going to keep this short, but I'm not saying this in fun. If you can make banking like TikTok, this market will come to you. If you make banking like old world banking, fintech is never going to connect with this new gen. If you make it TikTok, you will win in this market. So how do you take a serious thing like fintech, and how do you take it and make it more relevant to the community is going to be very important. So it's not the WhatsApp moment of fintech, it's the TikTok moment of fintech which is going to attract all of these people.
Right. Thanks. Super interesting, Amrish. Thank you so much for your time. And it's always fun to talk to you. So to all the listeners, thank you so much for joining us. And we will just sort of end this now. Thank you.
Thank you. Bye-bye.
Bye.